And you could make a fortune, but you could lose everything.
Listen, people have made a fortune and lost a
I lost
fortune.
it, right?
But that's, I think, why crypto gained its allure at the beginning was you could take $2,000 and turn it into 200,000, 500,000,
And that was real money. If you got in and
Yeah.
got out, you made the money.
Right. If you got out, yeah.
You
But
made the money.
it's funny, a little side story. When this is probably about 3 years ago, and I ran into a friend at a party, and he was talking about crypto, and he said he bought his kids, like two or three of his kids' accounts with coins, and he was up 200,000. And then the next day he went to the account and there was nothing in it. They stole all his money. And then like a week later, he
His
called
money
me up.
was stolen. Somebody took his.
The coins were stolen out of the account.
All right, hey everybody, welcome back. We have a return guest. This is the first time we've done this. We have Larry Benedict today, and the reason we're bringing him back is because, well, he's pretty amazing. To me, he's like the Wall Street whiz kid. Like this guy has so much information. So we had just a huge amount of views on his first episode. So I'm going to post that down below, and I want you guys to try and take the time to go back and watch his original episode. But Larry, welcome back to the show. We're going to have a fun conversation today about the collapse of the financial markets in 2023. Sound good?
Matt, thanks for having me back. I appreciate it. I love coming on. I love speaking with you. But I want to clarify one thing. I like the analogy to the Wall Street whiz kid, but I'm the whiz grandpa right now. So
I knew you were gonna be like, well, maybe you're so humble. But I mean, like the truth is, I mean, you know your stuff, and you're the professional, and you've got, I mean, so many decades. I forget how many decades, but decades of experience. And the first show that we did together, you had such a great response. We had, I think now we're almost at like 100,000 views, and it's only been a few months.
That's great.
People care about what you have to say. I mean, that's a lot of views, a lot of interest. So because I know that you know so much about the 6 things we're going to talk about today, it seems like it's a good time, right? So we're going into Thanksgiving of 2022, and there's a lot of talk on the news. There's a lot of chatter around us about what could be happening, what might be happening, politics, economy, inflation. It depends what channel you watch, and it depends what talking head you're listening to. But I know that you have information that's just unbiased. You're in it. And so I'm going to ask you 6 questions, and we're going to go at them hard. And we're going to keep in mind, we know whoever watches this, they're looking to get some valuable information. And I think that's what we're going to do for them today.
Well, I hope so. Yeah, that's the plan.
All right, my friend. Let's jump right into this. And that would require me to pull up my first question. Hang on a sec. Nothing like a live show that we can edit. All right. So this is awesome. Crypto. So right now there's FTX, right? FTX just went through a collapse. A lot of people are like not even sure what to do or what to think about crypto. It was an amazing thing for a 3 or 4 year run, and it peaked out, I think, earlier in this year. But what should we be thinking about? Like what's happening with crypto right now?
It's a great question. And I would tell you that it's probably, as far as like economy, it's not like a Lehman Brothers. Everyone's saying it's a Lehman Brothers moment. And I want to just tell you guys that the crypto space is important, but the market cap of all crypto combined is less than half of the market cap of Apple, one stock on the US stock market. So I don't see this as a full contagion across the board to Wall Street per se. This is very, very bad for the fact that it's an unregulated industry, and your money, believe it or not, is not safe by investing your money in any of these crypto exchanges. maybe Coinbase would be the only one because it's a listed stock on the US stock market, and it's pretty much the only one right now. But I just want to back up a little bit to my crypto experience and my crypto story. And I think I've only transacted 2 or 3 times ever in crypto since its existence. Not meaningful transactions monetarily. I do look back, and I have an interesting story. When I first got introduced to crypto, it was through someone that was at the time mining cryptocurrency. So when I thought of mining, I was thinking of a guy with a shovel and he's
digging up
digging.
Bitcoins.
I don't really know what that was, but the guy came to my office, and it was interesting. And you can never judge a book by the cover, but the guy looked homeless. He looked like he was a homeless guy. He had a ripped shirt, and he was explaining crypto to me. And he was explaining how he was mining it and getting coins for producing energy, et cetera, et cetera. And I couldn't really wrap my arms around it. But as a risk taker, I would have invested in crypto at that point in time. And crypto was probably at $800, I would say.
For Bitcoin.
Bitcoin was $800. But I said, hey, where can I buy it? What can I do? He goes, well, listen, you just, you put this on a stick, and your money is on this little zip drive, which, as you guys know, because when we set up this podcast, it's always difficult for an old school guy like me to get on just the podcast. So I wasn't going to do it because I didn't understand it. If it was listed on an exchange, or I could buy it in a Fidelity account at that point, I probably would have tried it out. But I passed on it, and then I watched it explode and go up basically tenfold from that point. And then watch the introduction of all these altcoins, etc. And, I don't really ever have like FOMO that much, because in being a trader, you can't do that because you miss so many opportunities to
You drive yourself crazy if you do that.
Yeah, 100%. So I didn't really have FOMO, but I was like just not understanding. But as time rolled on, a lot of these new exchanges like FTX and etc. came online, and the FTX thing to me is the most amazing company blow up. It blows away Enron, it blows away Madoff, it blows away everything.
So you're familiar with so what happened?
So basically, the way I see it, from reading about it and putting the pieces together and being in the business, and the more I read, these young guys and girls had, basically no risk discipline. They thought it was like Las Vegas, and FTX in particular got caught up in trading their own account. And by trading their own account, they were losing. And then, because there was no regulation in crypto, they had the ability to go into a company, FTX. They were Alameda Research Group, and the same guy owned both companies. He was able to take customers' assets and pledge them for trades that they were doing. So it was like one of the oldest tricks in the book, except
that's a Ponzi scheme, isn't it?
Well, I mean, I think a Ponzi scheme is really more of someone taking someone else's money and paying it to someone else. That's like a Ponzi scheme, and it builds on itself, and it's almost like a pyramid type of thing. This was different. This was one individual that went in, raided customers' assets for their own good to trade. So it's a little bit different, and it's almost a worse fraud, because like, imagine you have an account at Fidelity right now, and you have Apple stock in your account, and Fidelity goes in and takes your Apple stock and pledges it against positions they have. That's what happened here. He literally took the money from people's accounts without them knowing and pledged the coins as collateral. And their trading went so upside down that they lost the money. But, talking to the viewers and the public, I just think in this space, you have to be very, very careful. And what's interesting is on one of the exchanges that I trade on, the Chicago Mercantile Exchange, you can actually trade Bitcoin, which is backed. So that,
You said it's bad.
What?
You said that's bad?
Backed
Oh,
by
backed. Okay.
by the exchange and by
Right.
the clearing firm. So that's, I would say, the safest, best way to do it. When you go to some of these other exchanges, you run the risk of non-regulation. So, backing up to the beginning, the reason why these younger people and started this was they didn't want to have regulation. They didn't want people to know how and what they were transacting. So this was unregulated. And at the end of the day, they may get this this Sam Bankman-Fried guy on something. But
It sounds like it. He literally was taking people, he was using people's assets that he had no right to use. I mean, that's what you're saying went on.
Yeah, he
He leveraged them.
Yeah, he stole them. They were in coin
stealing.
form,
Yeah.
and people, I was looking at the top 50 creditors are, $4 billion. I mean, it's real money. I mean, this is a
big deal.
monster bankruptcy. But
do you think that now there's going to be a cascading effect, that now there's going to be other, because you have so many other exchanges, like there's Binance. I don't know them all. I know that one. I know you said Coinbase.
Well, Gemini is the next one to go, and that's the Winklevoss.
That's the Winklevoss guys.
Yeah, so they froze. It's interesting because
you think they're going down?
They're going to go bankrupt most likely, unless they find someone to give them a couple billion.
And why would somebody even do that? Are they doing the same thing that FTX did?
A little bit different. Their situation was they were paying high interest rates to people to borrow their coins. And basically they may have lost them. No one is really sure what has happened, but it's the same type of thing. They were giving a 14-12% return when interest rates were at 1. It was so enticing, but they had to be in things that were going to make them more than 12 or 14%, or they'd be down money. So they got hit hard.
But
they're probably going to go bankrupt. But what's very interesting right now is so many of these exchanges are frozen. Okay. So Bitcoin doesn't really move a lot. It's traded down to, it's about 16,000 on, today when we're speaking. It got down to about 15.5, which was the low of the move.
Yesterday,
but it's very, very slow because people don't know where anyone stands. People's coins are frozen. They can't get to their assets. So it's a true debacle. I'm not calling the end of Bitcoin at all, or cryptocurrency, although I don't fully understand what eventually the usage will be, because if the government comes out with their own digital asset, would you rather trade with the government?
Right.
But
and they control it. They control but they control everything. And so, I mean, can't really see the government letting this type of non-control go on. All the governments of the world.
Yeah.
Because if they wouldn't just give away control of the financial systems.
Right. Well, listen, they sort of lost it a little bit because this stuff became very, very big.
It happened fast.
But I think the pain is severe there. And I think, again, I've never been a crypto bull. I was admitting right here, I wasn't right. I didn't see it. I didn't understand it. More of that was what we discussed before, that I didn't know how to buy it. Obviously, later on, it was easy. I actually had an FTX account. I didn't fund it, but I had it. I didn't fund it. So I had that. I have a Coinbase account, but I don't really frequent in crypto. But the FTX story is amazing. And What's interesting is this guy may not even go to jail, because what he did is one of the worst things ever, but there's no regulation. So how are they going to get him in a market where it's completely non-regulated? I mean, they will get him on something somehow, but it's going to be
Yeah,
tough.
for sure. So that's
Yeah.
the essence of I think what this talking point is, which is cryptocurrency. Is there really a collapse? Not so much on crypto, but on a couple of the exchanges, just some serious stuff happening. But I think you hit the nail on the head. It's high risk. Everybody who's going to go near it has to know that you're doing something that's high risk, and you have to be able and willing to lose what you put into it, right? That's pretty much what it comes down to. It's
Yeah.
not something it's like the Wild West, and you could make a fortune, but you could lose everything.
Listen, people have made a fortune and lost a
I lost it,
fortune.
right?
But that's, I think, why crypto gained its allure at the beginning, was you could take $2,000 and turn it into 200,000, 500,000,
And that was real money.
So,
If you got in and
yeah,
got out, you made the money.
right. If you got out, yeah.
You
But
made the money.
it's funny, a little side story. When this is probably about 3 years ago, and I ran into a friend at a party, and he was talking about crypto, and he said he bought his kids, like two or three of his kids, accounts with coins, and he was up 200,000. And then the next day he went to the account and there was nothing in it. They stole all his money. And then like a week later, he
His
called
money
me up.
was stolen. Somebody took his.
The coins were stolen out of the account. But then 3 weeks later, he told me, or a week later, that the coins came back. And I'm like, listen, you should take your stuff and get out.
Take your money and get out.
So
That's a big win.
crypto, again, I'm not at all near an expert in that. But I do think you're going to see a lot more volatility, a lot more uncertainty. I just don't like, as an investor or somebody that talks to, retail public, I don't like it. I just think there's so many risks outside the risk of just whether you're going to make money on a coin,
It's all about risk.
Well,
Larry, I'm going to move you on to the next topic.
Yes,
we got a lot to
problem.
cover.
Okay.
All right. This one's going to be interesting. So 2023, depending on who you watch, everybody pretty much agrees there's a recession. Either we're in it, it's coming. The severity of it is in question. But what do you believe right now is going to be the thing that really is that trigger that says, okay, boom, this pushed us over the edge?
Well, so we'll back up to 2022. Coming into 2022, it was probably, the market closed on the high at the end of 21. Everybody was very, very positive coming into 22. I was a little leery. I was probably about 6 months plus too early on my thought process. The thought process was that the market would have a turbulent year, and inflation would be one of the biggest things to hit the market, which it ended up being right. Sometimes, again, I'm usually right. I could be a year plus early, which never works out too well. But in this case, it was probably 6 months early. The headlines started coming in. Inflation across the world. Interest rates were at zero. Coming into 2022, it's been the biggest rise of interest rates definitely that I've ever seen in my career, spanning back to the early 80s when rates were high. We went from zero to we're going to end up being about 4.5 plus on Fed funds. So coming into 23, it's an interesting thing. Everybody thinks, we're going to be in a recession, which we may be in a slight recession now. It's unclear. The jobs market has held us up very well. That's, held the world, which is, I'm not understanding it, but
maybe that's the trigger. Maybe when the job losses really start coming in the first quarter, which we know is happening, all the major corporations, well, many of them are already saying we're laying off tens of thousands. Maybe that's the trigger.
You know what? I actually think that is the trigger, probably. But what's interesting to me is, like, I'm looking, it's a little side to what we're talking about, but we'll get back on like the forecast, etc. But look at what's going on in Twitter. The guy buys the company. He gets stuck. He pays probably double minimally of what it's worth. He gets investors to invest around him $40 billion. Then he goes in and he realizes that there's no one working there and there's so much fat. And he starts firing people. And basically everyone says, if you're firing them, we're out of here. So my thought is, like, where is everybody going? How can all these people have the, wherewithal to sit in their house, be without a job, and then just weather the storm? So I look at it like a wrestling match in a way. So the
What a great point.
employee is got the employer pinned for the most part. Like, he controls what's going on with with the employer. When I started in business, it was the opposite. We were so happy. My first job, I got paid zero. I was like,
You're happy
trading
for the
assistant.
opportunity.
I did it for the opportunity.
Right.
People were like, oh my God, you got that job. So I think what's going to happen here, just judging from the Twitter scenario, is that job losses are going to be significant here. It'll probably push us into recession at the end of the first quarter. I think the employer over the employee will change. Whereas, someone
Yep.
like my son is going to be an attorney next year. And, he didn't start yet, but I'm like, listen, you got to go into work every single day. You want to sit next to the guy that has so much more experience than you, and learn everything he has. It just seems like maybe I'm
Best
old school.
advice ever.
I know, but maybe I'm old school. I don't know. They're
That's the
telling me
best
I'm old
advice ever.
school.
The best advice.
So I think that, looking at 2023, as far as, it's early for me to do my, sort of predictions for 23. I usually do that sometime in December. But, I'll give you a little, sneak peek into my thought process. I think the year will be choppy. I think rates will continue higher. I think that inflation will cool off a little bit here, but then we'll pick up in the end of the first quarter, maybe, and rates will tick up significantly here into the Fed funds 5.5, 6 area,
Yep.
which would push. Listen, another thing we really didn't touch on is
Wait,
the
Larry,
housing.
can I pause you right there for 1 second? Because I
Yes.
want to just summarize what you just said, because I think I agree with you, and it's I think you're brilliant for putting these pieces together. The unemployment is going to catch up with us. I mean, there's no question it's coming. It's going to catch up with us. And I mean, from my novice point of view, that is a big factor in what's going to push us into a recession. But that's what the Fed wants. They're trying to cause unemployment to go higher, right? Because that'll get prices more under control, because there's less buying power if you don't have any income. Am I right about that?
100%.
And then the mentality of people all around us don't, at least in my world, people are not, that I talk to, and the general energy is people don't really feel like this is real yet, because they haven't felt, some people have, but a lot of people haven't. And it's because the layoffs haven't really hit. It's just starting to happen. Amazon's laying off. I think, did Microsoft say they're laying off, if I'm not mistaken?
I think pretty much all the top 10
Everybody.
firms are cutting.
So that's going to happen. You're right. The rates are going to keep going up. This is exactly what the Fed is doing on purpose. You've been through how many cycles of this? It's the same cycle.
Yeah.
Like, so what you're predicting, you're right. It makes total sense.
Well, listen, things obviously are ever changing, so anything can change, but the way it looks like it's going down the road is, layoffs are going to be big coming into the end of the year, first quarter. That probably puts us to the brink of recession minimally. You have high inflation, which, even though it's cooling off a little,
Is it really?
not.
No.
But somehow, well, you know what? I think in some areas, like maybe housing prices, apartment rent, like apartment rents are big in that number. I mean, listen, food isn't, energy is a little bit, but
Don't
literally
they
the
leave
stuff,
out the most important numbers even in a calculation? Like, I forget what they
X,
leave out, but there's two things
X
they don't
food and
include.
energy, food and energy.
Yeah,
Who needs food
the
and
things
who
we all
needs
spend the
energy?
most money on, like they leave it
Right.
out, and those prices are
No,
going up.
100%. But, looking into 23, I actually see potentially the market going, we're about 8% off the low in the market as we're speaking. I do think the market probably makes a new low in the first quarter. I think we have a choppy year and then maybe turn around in the end of 23 and perform a little bit better depending on how things shake out. But listen, here's the one thing that I'm having a little trouble getting, I don't want to come on the show and be sanguine and basically, be a doomsayer, because I'm not. I love
You're
to be
being
positive.
realistic.
Right. But here's the one thing that is interesting to me. Today I was looking at Amazon. It's down 47% for the year. I'm looking at Tesla down 55% for the year. I'm looking at all of these stocks that everyone loved are cut in half minimally. Facebook's down 73% for the year. How are people, how is everyone okay? I've never seen an environment like this. Everybody's fine. So
How could it be that they're really fine? They just it
I
hasn't
don't,
settled in yet.
yeah, I don't know. The Dow is performing well, like the old line industrial stocks
That's
are the
only like
place
30
to be.
stocks, right?
Yeah, but
That's
that's the
not really
place to be.
representative of everything. It's just those 30
No, I
companies.
mean, it's old school. So like it's old school versus new school is, companies that are technology that don't have a lot of earnings, but a lot of potential, versus Caterpillar, which, are putting tractors all over the country and,
Right.
they're doing well. So, that I think that continues into next year as well, especially at the beginning of the year, where technology will underperform old line industrials. That's a trade that's been working really well. I haven't seen a disparity like this in years. So that trade's been working. But, again, focusing back on your 23, I think we touched on, job layoffs first. Okay. Inflation resurgence again, some point at the end of the first quarter, maybe ticking above 10 sometime in the middle of the year if they can't get things under control
You
with
think?
this, with the supply chain, etc.
Wow.
Yeah, I mean, listen, transportation is such a huge part of this, with food prices. I know a food diverter, and like so much of his cost is just moving goods. I mean, listen, it's the same thing. I can't get workers to come to my house, to fix things.
Hasn't
So
changed.
I don't see it's changing anytime soon. But, looking at 23, I think that, it's going to be at best a flat year with a comeback in the second half, to down to the lows at the beginning of the year. We'll play this podcast back in a year,
I
hopefully.
can't wait to do that. We can do this
It'll be
annually.
right.
Every
But
year in November. Maybe
yeah,
you'll
well, I'll
bless me
come
with
on
the
before I do my,
pre-announcement of your
yeah,
actual
right.
projection.
I'll give it to the viewers early. But no, that's what I think. And the one thing that I will say, in closing on this question, is things are ever changing. So it's hard to make a full year prediction. It's probably even hard to make a full couple of month prediction,
So fast.
but the forecast going in, as you said, job cuts are coming big time. So I don't know how many jobs are going to be lost, but it's in the millions and millions. So, we got to see how that plays into the beginning of the year. Inflation, obviously, interest rates, big caveat. How the housing market holds up. Listen, we live in South Florida where prices have gone crazy, but you might touch on this more in what you guys are doing. But from what I'm seeing from my 30,000 foot view is there's a lot of inventory or relatively more inventory than we have, and housing prices are definitely coming in. How much they
We're
come in, I
seeing
don't
it.
know, but they're coming in.
I mean, we're seeing it. I mean, you and I live in like similar area in Florida. And even though in our respective developments, there's different levels of lower end, middle end, and higher end houses. I'm starting to see price drops. They're not huge price drops, but on a $3 million house, I'm seeing something drop 100 or 200,000. I'm like, that's not enough.
No,
It's not
those
enough.
things are probably 500 lower, maybe
Right.
more, but
Right.
it's funny. It's like anything else. It's like in the stock market, until there's a sale at that price, it's not going to create, like, we need a reset. So when the reset
Yeah.
comes, somebody's going to blink. And when that person blinks and it's 500
That's
lower
right.
than last sale, it changes the market. So I think we'll see
right.
that in 23 as well.
I also, even in the lower end market, or the middle market, I have a townhouse in the Boca area that I think it's valued now. It's a townhouse. It's still valued like in the low 700s for a townhouse.
Well,
And it hasn't come down yet. And I'm shocked that market still hasn't really come back faster, like lower.
Well, I think that market will stay bid more than, I think the very high end will be bid. And I think that the stuff that's going to get hit is, let's say the $4 million house that was $1.8 million at one point, that's going to come in hard.
It has to.
Like,
who would pay? I even look at my house right now, and you probably could do the same for yours. And whatever they're respectively valued at relative to what we each might have paid for them, I'm like, who in their right mind would pay for my house what it's worth? I wouldn't buy it.
You know what? Listen, I'm in agreement, but again, another thing I was wrong on, pre-COVID, my son was looking for a house, and everything we looked at, I'm like, don't buy that. And guess what?
It all went up.
It doubled.
Right.
So
crazy.
I wasn't right on that. So,
Larry, I'm going to push this on to the next topic.
Sure.
I'm going to glance over. I'm going to work the next topic I'm going to skip over the next topic other than to just mention the election. We were going to get into it, but for the sake of time, I just maybe want to frame out. We know that the election changed control of the House, and we know that with a government that no longer has the ability to just do what they want, it's most likely unlikely that there's going to be money printing, that there's going to be a lot of spending, just because the Republicans have the control of the House. And who knows what's actually going to happen, but that might mean for all of the people that we were just kind of referring to, people that might be losing jobs, people for the stock market, all the things that were fueling everything going up for everybody. If you stop printing money, that kind of stops the train, doesn't it? I mean, there's no more relying on the government to save anybody right now. So with that possibility in mind, what might be the most dangerous mindset right now for people that think they're okay, that haven't lost their jobs, but that think inflation is leveled off because they're watching the wrong station on the TV, when it may actually continue to go? Like, what's the most dangerous mindset in your opinion right now for the next 12 to 16 months?
Well, I would say the most dangerous mindset is complacency. Not taking care of what you need to take care of. Don't have more risk on the plate than you're willing to take. What's interesting to me is a lot of people rely on the stock market for, income or money. I think you've got to sort of look at that differently. It's hard to do that when for the last 10 years up into this year, the market hadn't had a down year, and the market was the ATM to the world. And, you pointed out a really good point. A lot of that reason was that coming out of 08, 09, the Federal Reserve basically backstopped the market and basically printed money. I'm not even talking government spending, but I'm saying, going back to 09, the Fed actually bought securities, which never happened in the history of time, and they got out of them and did very well. But they saved the market, they backstopped the market. But what you've lost is what we call in our industry the Fed put. So basically, the Fed is going to come in and backstop the market. So I think, looking at that, the election, I don't love politics. I think set up the way we are may be a little better for the market, but I don't think it really is, because it's really looking at the Fed, looking at what they're looking to do. And the Fed, no matter what, wants to reduce the balance sheet and wants higher rates. And believe it or not, I'll say this, and I truly believe this, I think the Fed wants a lower market. Obviously,
Right.
they don't want it to crash, but they think, my thought is they think there's way too much excess in the market. So I think, they're gonna tame things a little bit here. Looking at the election and having, the split, I don't think much was really happening in the Biden administration, that would be productive for the market per se. I don't think a lot of policy got through. We're back and forth on this student debt thing. I don't think very much has happened there. So as far
But
as
is that not money printing in some fashion? I mean, they're just going to basically wipe out debt for people.
oh yeah.
That's money
Oh, yeah.
printing.
Well, listen, they've been doing all this stuff for years.
I wish somebody would have done that for me. I actually had to pay it, and my wife's.
Exactly. Well, listen, you know how that goes.
Yeah, I keep telling my father-in-law I want a refund. He's like, "Listen, you married her. You're paying for the master's degree."
Oh, that's funny. That's awesome. But yeah, so again, I don't really think there's a politicking thing that's much of a narrative as much as it would have been without having the Fed coming in and basically exiting out of easy money. So really, to answer the question on
The most
the
dangerous mindset.
election, I don't think it's near as big as the Fed.
So the mindset is complacency. So if people are complacent and they just think it's going to just be fine, that's a dangerous mindset. So what should
Well,
the
listen,
mindset be?
I think that is the mindset. Well, think about it. Every time the market's gone down, it always comes back, right? So I speak to people and, they say it always comes back. It's funny. My brother has a broker or an RIA or an investment manager, whatever they call themselves now. And literally, he just tells them, don't worry, it always comes back. It always does. It always does.
These are sales guys. They don't know what they're talking about.
Right. It always does until it doesn't.
Right.
So
They don't want you to sell it. It's to their advantage. I mean, this is obviously my strong opinion, but it's to their advantage for you to keep all your money in those accounts because they're getting commissions, right?
100%. They get fees and all
Not
of
that
that.
there's
But
anything that they're not being, I guess they have to be fiduciaries and they believe that they're giving you the best advice, but is it the best advice to just leave everything the way it is because it always comes back? You're saying maybe it's not the best advice right now.
well, that's what I'm thinking. But we'll see. The markets are they're ever changing. Like I said before, I do believe complacency is an issue here. I think it is an issue in a number of different things, stemming from housing. I just think it's funny, like someone's selling their house and they look at last sale, but last sale might not be where it is, but they don't want, that's why I think a lot of stuff isn't transacting right now on the housing market, is because the seller lives higher and the buyer now doesn't want to buy, at those
So it's a
numbers.
standoff.
So, right. So something will give there.
The rates are going higher. People are going to lose their jobs. People need a place to live. So it's what you said earlier on. There's a trigger coming. It's going to affect,
100%.
and it's going to affect everything, right?
But to this point, especially on housing, my thought process, hasn't been right. And a lot of my thought process was, I think, old school. So when I say that, when we bought our home, we put down a lot of money and we wanted to have as little payment as we can. And now people, because rates were so low, were able to finance a lot of money for not a lot of money. And, if stuff recycles, things are going to change for
For
sure.
sure. For sure.
Yeah.
So if we're talking like strategy, right? So, I mean, you've laid a really solid foundation for all the things that could happen. And frankly, like you're really in agreement with, a lot of other smart people out there that are looking at statistics and data rather than maybe emotions. And everything you're saying, I'm hearing is nothing you're saying to me is emotional. It sounds to me like you're looking at what's happening. You've been around through different cycles, and you're seeing some obvious possible things are about to happen. And again, you're in agreement with some pretty serious, well-known people out there. So it doesn't seem like you're going to be wrong about this.
I
But with
don't
that-
know. I like
with
to, I
that-
like to be, Matt, I like to be alone. I like to be alone on my thoughts. So
Well, here's the opportunity right now. So with that whole foundation laid, what should people be, not literally trading or investing, but what should they be doing for the next year or year and a half to not be complacent, to take control of their money, their assets? What should they do? I mean, give me 3 or 4 things that people really should do now to get ready for
Well,
what might happen.
I think the most
Now you can
important,
set yourself apart.
well, thank you. I think the most important thing is for these people that potentially are not professional in the industry to meet with their advisors, have serious talk about what they have, what they're thinking, and get into a position of what I call comfort. That you could weather. Listen, at the end of the rainbow, I'm sure the market will be higher in whatever amount of years, but it may not be 2, 3, it could be a while. So you want to make sure that you don't have a lot of leverage on, which is a lot of the reason why the crypto blew up. Everybody was leveraged. I would say most people that are viewing this probably don't have on tremendous amounts of leverage. But I wouldn't want to have on a lot of leverage. I'd want to make sure that you could weather whatever storm. I think it's important to sit down with your manager and find out what your allocation is. This year was very different than most. This is the first time pretty much in history where the bond market is down double digits and the stock market is down double digits. So in years when the stock market was really, really bad, the bond market bailed everyone out. And the traditional portfolio was 60-40, 60 bonds, 40 equities, or vice versa, depending on how old you are. But if you lost on your 60% stock allocation, 15%, you made 10% minimally on bonds. So you were barely down on the year.
Down 5%.
This year, bonds are down 20 and the S&P is down 20. Okay, so your whole portfolio is down 20. So I think it's important for people to actually see what they have in their portfolio, understand it, and move forward. A lot of people didn't have to understand what they had because they were always making money. So I would say the first thing, most important thing to do is review your portfolio year end, see what you have, see what you're comfortable with, see what your time horizon is. I think that's important to investing your own money. And one thing I'll say is nobody cares about your own money the way you do. So it's important that you stay on top of it. Don't rely on anyone else to care about your financial situation.
Can I add something right there?
What was that?
Can I add something right
Yes,
there?
sure.
So
100%.
while you're saying meet with your professional, because that's important too. At the same time, you're also saying that something that's very true. It is your money, and at the end of the day, you may not feel good about what your professional is advising or saying. So maybe what I'm kind of reading between the lines is don't be uncomfortable pushing back on whoever your advisor is and having a more in-depth conversation, and maybe say, I don't agree, or I don't feel good. And don't just take what they say as gospel, because they're not they're not you, it's your money, and you have to feel good about what
You
what
just,
you're
I
ultimately
think in a
doing.
way, you have to have an understanding of
Yeah,
what you have in a way, even if it's not something you're used to. You just have to get an understanding, especially, listen, you didn't need an understanding 5 years ago, 3 years ago, because the market was going straight up. So everything you had was working. Now it's very hard to find stuff that's working. So it's important that you know what the mindset of the professional is that's managing your money or advising to you.
exactly.
I think that that's really the most important thing moving forward. Then I would say, looking at all of your assets, get a true understanding of what you have, because a lot of people, are valuing their house at something that it's not worth. Get more realistic on valuation, would be important as well. But really, most people have a money manager or financial professional that they talk to. I would say that that's the most important thing to do right now, is to get with them to make sure that you're not too exposed and putting
Lower your
yourself in
risk.
that spot.
So is it, I guess it's also important. I mean, it kind of sounds like you're saying too, to consider what your time horizon is. If you're retired and you maybe have 10 years, or you're 35 years old and you have your whole life ahead of you, that goes back into the risk and the time horizon. So depending on what your time horizon is, this could be one of the best opportunities of your lifetime.
100%. I mean, again, you can never buy the bottom. Okay. Whether the bottom is 5, 10, 15% from here, that's not to be known. But, I wouldn't, the market is investable. You just have to have a time horizon. Like, I'll basically open up, like my mother is 82 years old. She owns less than 10% of her portfolio is stocks, just because it's not worth it. She can, knock on wood, she can be okay. Doesn't matter if she has capital appreciation. She just doesn't want to have capital loss. So in her scenario, we want to just make sure that my brother and I don't have to support her. I'm only kidding. She's in a good position to live out but there are other people that are friendly with her that aren't in that situation, that have to gain exposure to equities, which for the last bunch of years has been great. But now I'm sure if we have another 1, 2, 3 years like this, that sets them back in their mid 80s, it's bad. I mean, listen, if you're listening to this and you're 40 or younger, you got to invest the way you're going to invest for the future. But it just depends on where you're at. You can't look at it every minute of the day, but you don't want to be overexposed, and you want to know, what your time horizon is. Like you said, I would say anyone that's in their 70s to 80s should be very light more light in equities. Bond returns are very good right now and getting better. So, I would look more potentially to bonds, here.
So Larry, there's a few things that we touched on. I want to bring this to a close, because you really, you package this nice. So we can make some assumptions, right? That we'll look back 6 months, a year from now, and see if these things were right. But we know inflation's going higher. Maybe it's going to pause, which it seems to have, but it seems like it's going to go up. We don't know. We think it's going to go higher. Fed is going to keep raising rates. We don't have to guess on that. They've told us, and they keep moving the goalposts occasionally. And so it depends which person from the Fed is speaking. But we know there's still some more happening there. We know there's layoffs coming, probably in the millions in the first quarter of 23. And we know that people are somewhat complacent, and I would agree with you on that. So your advice is pretty straightforward. Speak with your advisor, know what you have, understand what you're doing, lower your risk, and position yourself so that the uncertainty of 23 minimally impacts you, and you can focus on your family. You could focus on what's important: the roof over your head, the food on the table, keeping your job, continuing to have your cash flow and in your life, your revenue coming in, keep your expenses low, and just set yourself up now to be smart to see how the year plays out. But if you do all those things, you'll proactively now, you'll certainly be able to look back a year from now and say, wow, I'm glad I took all that into consideration and made some changes. That's what I'm hearing from everything you said.
Well, listen, I couldn't have wrapped it up any better than that. No, really, and the truth is, hopefully we have a little bit better year in 23 than
Sure.
22. I think we probably will. We hopefully will. Again, rocky start, I think, and then maybe a better finish. Again, we'll revisit that, mid-year or whenever you'd like. But you wrapped it up perfectly. I just think people have to, what do they say? Live to play another day,
Live to fight another day.
Yep.
All right. Bonus. This is a 60-second bonus question.
Uh-oh.
All right. And if you don't want to answer, just say, you know what, I don't want to answer this one. But what we don't know is what's going to play out in the Ukraine with Russia and all the craziness that's going on there. There is a sector that you could invest in if you were going to sadly invest in what's going on. Would you agree that it might not be a bad time to look at things like General Dynamics and all those companies that have to do with, that do well during war?
Yeah, I mean, it plays a little bit into what we talked about with industrials, old line industrials. They became sort of the utility safe stocks of 2022. And I think that trend will continue in 23. Again, I don't know what's going to happen. Hopefully, knock on wood, none of that ever materializes as far as, escalating war, etc. But yeah, I mean, I think those stocks are, I would consider more safe than other names for sure.
I hate to ask the question because it's a morbid way to look at things, but I mean, the reality is that those companies are US companies, many of them, and they do tend to do well when there's a lot of military activity happening.
Yeah, I like that. I think that sector is fairly safe for right now.
Yes. Wow, you did that in 49 seconds.
All right.
Well, I think maybe we should do this every quarter if you're willing to do it, and I won't hold you to it.
I would definitely listen. If we're able to help people and it's insightful for people, I would love to come back.
This was great. I mean, if we just help a few people that listen to what you said today, everything you said was great advice, and it's all real stuff. It's all happening. We can't put our head in the sand and pretend this isn't happening around us. That's the worst thing to do. Yeah. It's happening. So you gotta take action and be proactive.
100%.
I'm really glad you came on and did this with me today. And by the way,
thank you.
We have like 10 shows lined up. This one is going to get edited, put out in the next week or two, because we want people to see this like right now.
Okay, great.
So we're bumping this one up.
Okay, perfect. I appreciate it, Matt. Thanks.
Thank you. And so what we're going to do is, like we did last time, we're going to take all of your contact information, which we already have. We're going to put it down below. So anybody that wants to find you, they want to subscribe to your newsletter, which I know you have.
Yeah.
And everything about you, we're going to put all down below because we want people to be able to find you. You're a valuable resource.
Oh, thanks, man. I appreciate it.
Larry, thanks again. We're going to do this again, hopefully in maybe the first quarter of the year. I hope you have a really happy holiday and that your family is well. And hopefully we reach some people and we help some people. So thank you again.
No, thank you, Matt. Happy holiday.